Hello, today we're going to do problem 10-2 on page 404 and 405 of the textbook. Problem 10-2 is very similar to problem 10-1, which we did in class. The company is Garrett Bug Spray Manufacturing, and we need to do a budgeted income statement, cash receipts and cash disbursements budget, and as well as a budgeted balance sheet. So let's get started with the income statement, which is part A. So the book tells us that sales in the prior year were $400,000, that they are expected to increase by 5%. So we multiply 400,000 by 1.05, and we come up with 420,000 as our projected sales for the next period. Variable costs in the prior period were 225,000. They are also expected to increase 5%. Therefore, variable costs will be $236,250. Sales minus variable cost is always contribution margin. In this case, we have $183,750. We know to do a contribution margin income statement because the text informs us that variable costing is used for budget purposes and that all fixed costs are expensed in the period in which they are incurred. Therefore, we have to first subtract our fixed manufacturing costs, which I have designated here as just a fixed cost. So these fixed costs include $2,000 of depreciation, which will not increase. And then the remaining fixed costs will increase 2%. So we take the prior year fixed cost, which is $65,000, subtract our $2,000 for depreciation, and multiply all of that by 102. Once we complete that, we need to add the $2,000 back, because while it's not increasing, we still have depreciation of $2,000. Therefore, our number for fixed bug removal costs is $66,260. We do a similar equation for fixed selling general and administrative costs. In this case, last year's fixed selling general administrative was $27,000. And it included $3,000 of depreciation. It is also expected to grow by 2%. Therefore, we multiply it by 1.02 and add back the $3,000. This gives us $27,480 in fixed selling general administrative costs. So, moving the sheet up to finish our income statement. Contribution margin minus fixed expenses is $66,260. and $27,480 yields income before taxes of $90,010. Our tax rate, we are told, is 40%, so 40% times $90,010 is $36,004 rounded. So subtracting that out, we have a net income of $54,006. Okay, so that's part A. Let's move on to part B.